We were talking about Elon Musk just now, and he basically supported Senator Lee's idea to shut down the Fed over the weekend. Over the weekend, the Wall Street Journal published an article about Powell being prepared to defend his departure if he is actually asked to resign. Do you believe that any attempt to re-executize or influence the Fed would be met with a revolt from the bond market? Absolutely, I mean it. The Fed is the most powerful organization in the world, and part of that power is its independence, which even the bond market fears. I believe that the capital markets would not benefit from a change in the central bank structure, considering that the Trump trade has been going on for some time and that the Journal claims a meltdown may be imminent. I was wondering if things were getting out of hand. He likes easy money, he wants little regulation, he likes fewer taxes, so I suppose there's a lot for the markets to appreciate. There are a bunch, really. Perhaps you think it's more than a two-way rally. Yes, exactly. Additionally, I believe that markets may be reversing their direction because, under Doge, the Department of Government Efficiency, defense spending may result in cuts to industries and healthcare. Investors can therefore concentrate on items like financials and small caps, as well as more deregulation of animal spirits. Okay, so what about medical care? You specifically mentioned that. Doge won't be the only one searching for more methods to be more efficient after all. Additionally, RFK Jr. is undergoing adjustments. How does the market sort of balance it out? We'll talk to Mark Bellini about it in a moment. Indeed, I believe that this will be a difficult time for healthcare awareness because, recent remarks about how much healthcare spending dominates advertising outside of the electoral cycle. Indeed, there are worries regarding the safety of some vaccines and RFK's leadership of HHS. Thus, I would simply state that clouds exist. Opportunities will still exist, most likely in the biotech sector, but they will be difficult. Regarding the markets as a whole, Tom, do you anticipate that the gradual decline we've seen this week won't continue as Thanksgiving approaches? Do a number of things contribute to your positive outlook for the upcoming weeks? And the Treasury Secretary's announcement is one of them, which relates to what we've been discussing all morning. It will eliminate some ambiguity. To find out who's in, you're following Polymarket. What? Besant was 70 years old, but his odds increased after Musk tweeted about Letnick. Now what? Both of them have fallen. Both of them have dropped to less than 40%. As a result, Mark Rowan and Kevin Warsh have both advanced. To choose the next Treasury Secretary, we are using Polymarket. Stranger things have happened. Do you believe that this week's announcement will clear up any doubts, or is it not the most crucial factor? As we eliminate uncertainty, which might not be revealed for another week or so, I believe that's what I would call a clearing event. I believe the Trump trade is still in place, and it removes some uncertainty. You stated that we are in a good spot dovishly, even though the Fed may not produce as soon as it wants to. Yes, exactly. When Fed Chair Powell hinted last week that he could, slow things down for December, the markets were a little caught off guard. A year later, in December 2025, however, the amount of predicted cuts remains unchanged. Thus, I believe he is dovish. All he's doing is shifting some of the timing. Ask you about Nvidia's membership in the Dow and flip it now. Based on your observations throughout the years, how do you think about that? Indeed, on some level, the Dow may have felt somewhat out of step with the current state of the economy due to the prior inclusion of Intel and the lack of a play on Nvidia, which accounts for 7% of the S&P 500. One could argue that it is simply clinging to a high momentum play after it has already made its biggest gains. I was just examining the market capitalization comparison between Apple and Nvidia. Currently neck and neck, Nvidia will have roughly half the net income and a third of the revenue in the upcoming year. Thus, it is evident that the stock is more costly, but it is expanding at a significantly faster rate. First of all, just because a stock is listed on the Dow does not provide you a fresh incentive to purchase it in the near future. According to history, there is absolutely no reason to purchase. The amount of money indexed to the Dow is quite little. It's more about confirming its existing position in the new tech economy, which we already knew about in a way. Therefore, once more, I don't believe it's a sell the news story. Perhaps the Intel concession makes it a good buy, But right now, it appears like the Dow is more concerned with staying relevant. Okay, nice stuff. We have had cyclical leadership for a short time, and TRS have been resurfacing beneath the surface. The dollar has been comparatively stable lately. Since the Fed lowered interest rates, yields have been rising, and the economy has shown encouraging surprises. Now it's just a matter of sort of putting that 2016 script to use and perhaps humming it a little bit in terms of things like small caps moving, where banks are clearly just heaping on the gains. I do believe that the subject of where to begin will come up. From a valuation perspective, inflation perspective, deficit perspective, recent economic growth rates, and perhaps even investor stance, the current starting place is not exactly the same as it was in 2016. Before the 2016 election, the market was flat for 18 months. In the subsequent 18 months, we've seen a 40% increase. Animal spirits haven't been sleeping, in my opinion. This possible policy mix has essentially given them even more energy. Jim, in relation to excellent foundational businesses, what about technology? We reached these all-time highs because of those names after all. Will they carry us there any longer? Tomorrow, Nvidia will be released. All right, so let's discuss Nvidia. I would like to send a shout out to Josh, who I believe has been in it the longest out of all of us. Perhaps even you, Jason. Look though, tomorrow's report is probably going to be excellent. There's no reason to believe that it will be any different. People can't get enough of the chips, as seen by the hyperscalers' discussions about capital expenditures, capex, and nearly every other news story. I would advise against paying much attention to the short-term price activity. Much of this is related to short-dated options, which people are wearing to play the pop, most likely following earnings, and then selling the calls, which causes the stock to decline. Therefore, don't worry about the immediate action. In general, I believe that individuals will be reluctant to sell things as the year draws to a close for the same reasons that we have all discussed earlier in the show. Once more, you don't want to accept a taxable gain, and if you're benchmarked or indexed, you don't want to risk lagging behind the benchmark. By the way, I just wanted to connect this to what Josh was saying a while ago about projections and why bottom fishing isn't a good idea at the moment. In other words, what are your expectations for the sales and growth rate of the upcoming year? This will help me understand why you have set your price goal at that level. My revenue is expected to expand by 50% next year, which I believe is conservative. The following year, I'm at 22%. Given Jensen's history, who knows if that 22 seems like a lot? Our goal is merely 35 times our projection for 2027, which is actually calendar 2026. For this stock, it is a PE to growth that is still quite appealing at the moment. The stock can, of course, decline on any given day. However, considering the company's current growth and the fact that it is a systems company, similar to what Apple is for consumers, I believe it will be larger than people currently believe, generate higher profits as a percentage of the industry, and endure longer. In my experience, vertically integrated businesses that do everything well and consistently succeed tend to last longer than most people realize. When you discuss your revenue estimates at 50% and 22%, I find it interesting that Nvidia execs are taking their time and discussing growth, but you probably won't be able to maintain excitement at 50% indefinitely. Can they really walk thus carefully? This is a cash gusher too, so eventually Nvidia will have to buy back more stock because they can't do anything else with it, even though they want to claim that they are a growing firm. Naturally, the government is unlikely to allow them to purchase anyone for even a fraction of $1 trillion. Time for the last trade, Steve? You can play Bitcoin or BTC Grayscale Minis however you like.